Welcome to the first ever podcast for Visionary Tax. My name is Tyler Kem, CEO and founder of Visionary Tax, a Los Angeles-based research and development tax credit firm that focuses on providing research and development tax credits to the emerging tech industry. We're very excited to get going and get the word out about what research and development tax credits are, and eventually have industry leaders come on and talk about their projects in the artificial intelligence, blockchain, cryptocurrency, virtual reality, augmented reality, software development, FinTech, mobile app development type companies. I think before we get a little bit too deep into the industry specifics, I think we should go a little bit deeper into how Visionary Tax was born and, why we are on a mission to educate the emerging tech industries. Born in early 2018, Visionary Tax, I had a vision of working with tech entrepreneurs, those developing new emerging tech such as blockchain, cryptocurrencies, artificial intelligence, virtual reality developments, and be able to get on the ground floor and work with a lot of these tech entrepreneurs that may not know a lot about tax credits or deductions, and going even as far as the research and development tax credit. For me, it all started when the research and development tax credit became permanent in late 2015, effective January 1st, 2016. The firm I was with had a very small R&D tax credit department, and when it became permanent, I was so interested in how the research and development tax credit could apply to almost every industry, and that ultimately led to some of my interests. It was actually in late 2016 when my entrepreneurial spirit kind of came out. The firm I was with had a Shark Tank competition that was looking for new ideas, new industries, new service lines to get into from its employees. And right around the end of November, middle of November, when the elections were happening and California legalized cannabis use for recreational use, is when I had the idea of doing research and development tax credits for the cannabis industry. As you all know, there is so much innovation and research and development going on in the cannabis space that I went to my firm and said, hey, we should be doing research and development tax credits for the cannabis industry. A little bit further down the line, I ended up winning the Shark Tank competition, and me and the partners ended up looking into, what are some of the risks of getting involved in the cannabis space, and, if we were to serve the cannabis space, would there be repercussions on the CPA and tax consulting side? And ultimately, we figured out that it wasn't going to be the best move. And so, going through that next busy season doing research and development tax credits for other industries, I started to get into cryptocurrencies and blockchain technology. And, once I started realizing what type of innovations were happening on the blockchain side and the cryptocurrency side, it finally rung a bell. And I said, hey, everything that's happening on this side as well is research and development tax credits, right? I mean, everyone on the emerging tech blockchain side is trying to create a new platform, a new protocol, a new wallet, a mobile wallet, an exchange. And the development cost per the IRS says this is all research and development tax credits. So I then went again to the partners and said, hey, I know the cannabis didn't work. It's maybe a little bit too early. Let's do the blockchain. Let's educate CPAs with CPEs and, give out guidance as to how the tax treatment of cryptocurrencies for individuals and businesses, as well as being able to do the research and development tax credit. And ultimately, the firm I was with didn't feel like it was the best fit to jump in right away. And all of a sudden, me having and being very passionate about these topics, it was something that I couldn't turn my head away from. And so ultimately at the end of 2017, I decided to walk away and start my own research and development tax credit firm, which is now Visionary Tax, that focuses on emerging industries. However, besides the research and development tax credit for the emerging industries, there's something that needs to be said. The research and development tax credit has been around since 1981, and it was founded during the Economic Recovery Act, which at that time was used to incentivize U.S. companies to keep the highly technical jobs here in the U.S. to try to stimulate the economy. Over the course of the last 35 years or so, the tax credit has expired 8 times and has been extended more than 15 times, and until it was made permanent in 2016. This is why I felt so comfortable being able to leave my firm and start my own tax consulting firm is because of the fact that it is now a permanent federal and most states tax credit. And for the first time, companies do not need to be in a profitable tax position to use the tax credits. So for startups, less than 5 years of gross receipts and less than 5 million in gross receipts for the eligible year, the tax credits that are generated can offset quarterly payroll tax to the IRS, as well as offset alternative minimum tax for companies that have less than 50 million in gross receipts for the 3 preceding years. So once I got a few years under my belt and I really understood how powerful of a tax credit this could be, I started thinking about these emerging tech industries. And these guys may not have CPAs, they may not have accountants, they may not know about the research and development tax credit, but these emerging tech companies are really companies that are eligible for the R&D tax credit for the first time, or maybe a great candidate for the first time. Why do I say that for the first time, right? And so when you think about emerging tech companies that have, that are funded or are developing a new technology for the first time, it usually takes a few years of development to actually start selling that product commercially. And when you think about that from a business perspective, right? And so if a company that is creating something new for the first time doesn't have any sales, they're going to be working with net operating losses or losses that carry over year after year. And so for companies in the tech space, right, typically working with net operating losses in the first year. Going back before 2016, these types of companies weren't the ones taking advantage of the R&D tax credits, especially those startups, right? Because if you have net operating losses for the first couple of years, and although the work that you were doing qualifies for the research and development tax credit, why would we be looking into taking this research and development tax credit if it was not going to be there next year, or the credits that we are unused don't get used in the next year or two, right? So why look into that type of study? But now these tech companies that are developing new technologies that are definitely qualified and spending wages or outsourcing contracted labor here in the U.S., they're obviously working in losses, but now they can take these tax credits generated against their quarterly payroll tax for the first 5 years of gross receipts. And, that's just huge. And that's an industry and a target market that has never, ever been eligible for R&D tax credits that's eligible for the first time. I think the craziest part, educating and putting myself on the ground floor with VR, AR, AI, blockchain type companies over the last 6 months is just realizing how little the tech entrepreneurs and those that have been in this space for 10, 20 years are just unaware of the research and development tax credit. Many have not even heard of the research and development tax credit, and for good reason, right? But, the reason why we are starting this podcast and we're looking to meet and talk with other tech entrepreneurs from various industries is just to be able to get the word out there that, this is a permanent federal and state tax credit. Another one of the most interesting things that I have heard in the last 6 months was when I was visiting the Augmented World Expo up in Santa Clara in late May. I was speaking to a gentleman that was creating a augmented reality headset up in Canada, and I spoke to him and I said, hey, are you guys taking the SHRED credit, which is the scientific research and experimental development tax credit up in Canada that's been permanent, been around for many years, and it is much more lucrative here than the R&D tax credit down in the US. But he said, of course, isn't everyone in Canada taking the SHRED credit? And I said, I'm sure they are. However, the R&D tax credit just became permanent down here in the U.S. in 2016, and as such, a lot of companies that are developing new products, software, technologies, patents, inventions, etc., aren't even aware of the R&D tax credit. And he goes, oh, that's funny. I didn't know you guys had one down there. And, that's just kind of the misconception that a lot of these people in the tech space and, those manufacturing, developing, architects, engineers are just unaware that this research and development tax credit is permanent. And, for the most part, I'd say, 75% of the people that are R&D tax credit specialists are with the big four. They're working on Intel, IBM's, Apple's, Facebook's R&D tax credits. And there's a good size that are with the medium-sized firms, right? The Cohn-Resnick's, the BDO, KBKG, Alliant, you name it. And, these types of medium-sized companies are working with CPAs across the nation and small to medium-sized companies that are doing R&D tax credits for almost every industry. That's kind of when I started looking around and I said, where are the industry-specific niche R&D tax credit firms? And ultimately the ones that are helping the startups. And I could not find them. And that is when I knew that I'm supposed to be working with the emerging tech entrepreneurs. Being here in LA, there's no greater place to be working with entrepreneurs and startups. So my goal here on this podcast and with Visionary Tax is to be able to link up with other CPAs, lawyers, consultants, tech entrepreneurs themselves about the research and development tax credit. And because there are so limited of R&D tax credit specialists that are out there that aren't with the big four, the medium-sized firms, it's going to be important for me to be able to educate, other CPAs that have to do the accounting, the tax returns, and the payroll tax and everything else that a CPA, their hat that they have to wear. This is just going to be one of the tax credits that eventually they're going to be able to understand how to calculate and how to document. But until then, you really have to rely on the tax credit specialist to understand how to document and substantiate these tax credits. So I know I've been talking a lot about research and development tax credits, so let's dive into what is research and development tax credits, right? How do you qualify? What type of expenses should we be looking for? How do you know if a business qualifies for the research and development tax credits? To qualify for R&D tax credits, a business of any size must meet all four parts of the four-part test. The first part is permitted purpose. The intended purpose of the activity or projects must be to create or improve the functionality, performance, reliability, or quality of a business component. A business component is defined as any product, process, software, technology, formula, patent, or invention. The second part is the elimination of uncertainty. The activities and projects in question must attempt to eliminate uncertainty related to design, development methods, or components' capabilities. The third is process of experimentation. The activities must include processes of experimentation of the unknown. That would include testing, evaluating alternatives, or systematic trial and errors. The last and fourth is technological in nature. The activities and processes of experimentation must rely on hard sciences, such as computer science, engineering, chemistry, biology, or physics. If you can answer yes to all of these, the qualified research expenses associated with that project or business component are considered qualified and can be captured towards the R&D tax credit. What expenses qualify for the research and development tax credit? After identifying which projects or business components of a business qualify, the next step is determining which expenses qualify towards the R&D tax credit. The first is wages. Taxable wages, W-2 Box 1, paid to employees directly engaged in qualified activities, or those employees that are directly supervising or supporting those that are performing the direct research. The second are supplies or materials. All supplies expensed for prototypes or for testing materials can be captured, as well as leased equipment or computers. The third is contract research. So any payments made to a third party, whether that's a contractor, subcontractor, vendor, to perform qualified research or testing on behalf of the taxpayer or business. All three of these expenses combined can be captured towards the R&D tax credit. So as you can see, there are many activities and qualifying projects that could qualify, as well as, qualifying expenditures. It's just about being able to read the IRS tax code, be able to calculate it, and ultimately, document, defend it, and substantiate the tax credits and tell the tax credit story. And that's what we really want to do here, is be able to, tell that tax credit story for any business of any size. So on the federal side, businesses can go back and amend the last 3 years of open tax returns, as far as the statute of limitation is open. So if a business that filed a tax return in April of 2015 for the 2014 year, they have until April of 2018 to go back and amend that tax return. Obviously at this point, April has already passed, but, if someone were to extend and, file in September of 2015, they could go back and amend that tax return and file, and claim the research and development tax credits for the year 2014. and those tax credits do roll forward 20 years on the federal side. Every state is a little bit different, but for the most part, they do follow the federal guidelines as far as rolling forward these tax credits. It's so crazy that, all of a sudden this is a tax credit that's permanent. You can go back, claim R&D tax credits for the past, generate tax refunds if you did pay income tax in the years 2015, 16, 17, or if you did pay payroll tax in 2017 and are continuing to pay on a quarterly basis. The tax credits that are generated in the last couple of years can help offset these tax credits, and you don't have to be in a profitable, income tax position anymore. And I can't stress that enough. And, that is the purpose for this podcast. And it's really to be able to reach the tech entrepreneurs and those companies that have never heard of it, never heard of the tax credit, never taken it, never looked into it. The CPA may not be aware of it. That's kind of just where we want to come in, help spread the word, talk to anybody and everybody about this research and development tax credit. As you can see, this is all I do, this is all I talk about, and this is all I want to talk about with you guys. So a little bit about the podcast going forward. We do have a few industry leaders that are going to jump on our podcast in the next few weeks. However, we are looking for more founders of companies in the tech space. Not necessarily have to be in the tech space either. We are looking to have podcasts with accountants, lawyers, tech consultants, and, anyone from any industry really, just to be able to talk about research and development tax credits and get a different perspective as to, if the research and development tax credits can be taken for your industry, and if not, that's another great conversation as to why the R&D tax credits wouldn't be a good fit for your industry. So, if you are interested in doing a podcast, jumping on a podcast, getting the word of your company and your guys' mission out there, please do reach out. We would love to have, attendees come on our show and just talk about accounting, talk about tax, talk about cryptocurrencies or the development in artificial intelligence or virtual reality. These are, the innovations that are happening in this space are just, so next level. The cutting edge type technology that's happening, goes over my head even, right? To be able to talk the language with some of these highly, highly technical developers is really interesting to me. And I think, having an outlet to just talk about some of the developments happening is just, very, very interesting to me. And I think being someone that wants to learn as well, I think, this is something that I'm looking for. And I hope that by creating this podcast, it's giving an outlet for people to learn. And, that's what we do. We're just here to educate and to learn. If you are looking for some more information about jumping onto a podcast or learning more about research and development tax credits, please feel free to reach out to me directly at tyler@visionarytaxes.com. That's visionary, TAXES.com. Some of the podcast topics and industries that we're looking to connect with are blockchain, cryptocurrencies, virtual and augmented reality. Those that are in the compliance side, maybe on the crypto or blockchain lawyers, maybe an influencer if you yourself have a podcast channel or a YouTube channel where you're talking about anything in the emerging tech, we'd love to have you on as well. The CPAs and accountants themselves, whether it's the tax, accounting, or audit industry, we'd love to have you on just to talk about maybe some of your clients, whether you're familiar with the research and development tax credit, how the tax credits can be beneficial on the tax side versus the accounting side. I think that's also very interesting. Of course, the artificial intelligence, those in FinTech that may be creating, software as a service or mobile applications. Those are also qualifying type activities, as well as, software development. I think 3D printing and robotics is also very interesting and has a lot of qualified activities and expenses as well here in the U.S. Of course, we're always open to just about any industry or any, influencer or professional themselves to just jump on and let's talk. And we're going to try and, hopefully at the point where we can start putting out a podcast a week. We do have a few lined up, like I did say, but please do feel free to reach us at tyler@visionarytaxes.com. That just about wraps up our first podcast with Visionary Tax and myself, Tyler Kem. I hope you were able to learn a little bit more about who we are, what we do, what our mission is, and what we're looking to do on this podcast specifically. We hope to connect with each and every one of you throughout our journey and mission to educate the United States, entrepreneurs, startups, CPAs, lawyers, etc. about the research and development tax credits. We're here always to answer any question that you may have on our various social medias, such as Instagram, Facebook, LinkedIn, YouTube, all at Visionary Tax. On Twitter, we're at Research Credits. Please do find a way to reach out and link up with us one way or the other. We have been posting our videos on YouTube at Visionary Tax and some of our articles on Medium at Visionary Tax. Thank you all again for listening and tuning into our very first podcast. Please stay tuned for more updates throughout the week and coming months. We do have some very exciting podcast interviews coming up that you won't want to miss. Again, thank you and have a great rest of your week.